Hey everybody, Dan from Keller Williams. In this video, we're going to talk about a new loan program that just came out that they're testing that I think is complete garbage. So in our last video, what we talked about is how the Fed raised the interest rate right after the election. They raised it by about 0.5 point, and immediately what they saw was a decrease in the amount of new applications for people looking to refinance their home. Well, that's a huge moneymaker. Doing the refinancing, there's a lot of money involved in that for banks. Now that they're seeing the applications drop, they're struggling to find some new things in order to get people to continue purchasing loans and go ahead and keep making money. So here we go. This is a new down payment program. By the way, this is from Inman News, just came across my desk. New down payment program option could help boost home ownership. Here we go. Freddie Mac is piloting, reputable, right? Freddie Mac is piloting a program that lets home buyers get half a 20% down payment covered by a financial firm in exchange for home equity. So here we go. A new government-backed loan where you will basically put in half of the amount of a down payment in exchange that when you sell the home, you're going to owe 35% of the gained equity back to the bank. Okay, here we go. 10% down payment and end up with the same monthly mortgage bill as borrowers who use their own money to cover the full 20% of the same loan but don't use the program. Okay, so the bank's going to give you that other 10% to make up a full 20%. You don't pay the PMI on it. However, in exchange, you're going to give them 35% of your equity when you go to sell a home. This is called a shared equity program. Shared equity, I think it's theft equity. Here we go. Case study. These are the case studies that they're using to support the program. And I seriously don't know if they threw these case studies in there to try to prove why it's not a good program or if they really think it's a good program and that's why they included these. I think it's an argument against using this program. Here we go. $200,000 increase in buying power through using this program. One couple used the product being the loan program, used the product to increase their buying power by more than $200,000. That makes sense. You have to come in with less money down. Someone else is going to give you that money. They'll let you buy a more expensive home. Okay, here we go. They bought a $1 million home before the property hit the market. These particular clients had great jobs, both had great incomes, but their history and their credit was not good. Does that sound like someone who should be buying $1 million home? They have $100,000. They're going to get the other $100,000 to make it a full 20% from the bank in exchange for their equity when they go to sell the home, but they don't have good credit and they don't have the down payment. So would you take that bet? No, I wouldn't. Here we go. Second case study. Another first-time home buyer looking to purchase a $689,000 home increased their purchasing power by $75,000 in order to purchase this home using this program. Now this is interesting. The buyer is a well-educated young professional, earns a high income, but struggled to save for a down payment due to student debt. So they're going to give this loan program to purchase a $700,000 home, and he can't do it on his own because he has high student debt. Again, is this someone who should be purchasing a $700,000 home when they already have high student debt and can't save for a down payment? I don't think so. Now, this is a quote directly from the CEO of the company who is organizing these loans. Here's what he said about this loan program. I can only assume he didn't have rich parents to help him buy this house. There you go. They're going to pull out the heartstrings and they're going to say, oh, well, this kid can't buy this home. He has high student debt. It's not his fault. He doesn't have rich parents to help him buy the home. However, we're going to let him buy a $700,000 house. I really don't think that that's a safe bet. I wouldn't do that bet with my money. However, this is backed by the government now. So we are all going to be taking a bet on these kinds of programs. So look, the reason why I'm doing this video is because as the interest rates continue to rise, these are types of loan programs that you're definitely going to watch out for. So when you go to get a loan, do something that absolutely makes sense and look at all the positives and negatives. This could be the beginning of creating a bubble. They're trying to force people into homes so that our economy doesn't slow down. Watch out when you make an investment. Watch out when you go and you do a loan program. Talk to several people and get multiple opinions about these types of programs. Absolutely do not trust anybody who is trying to sell you on a program like this without talking to multiple people in the industry. If you guys have any more questions, happy to talk about these kinds of things. Now, this loan program isn't out yet. They're doing a pilot test on it. It's not available everywhere, but this is the kind of stuff you're going to start seeing as those interest rates continue to rise. Questions? RenoPuz@gmail.com.